Hi, I'm Susan Dewbrew with Dewbrew Realty, and I wanted to give you a quick market update. Many of you have been asking me, so are we in a real estate bubble? We know prices are going high and people are fighting for houses, but I can assure you this is not a real estate bubble. And so what I wanted to do was just give you a little bit of market history of what's going on in the real estate market in our area over the past few years, and why I don't think this is a real estate bubble. So here is a graph. I don't know if you can see my little ups and downs. You just have to get the general feel of this. But this is our real estate market here in North Texas for the past 10 years. Right here at the beginning in 2008, we had a major financial crisis. The banks did all kinds of very bad things, lending to people who really could not afford it, and then people were selling those mortgages on the subprime market and generating a huge demand for them. And so there was all this pressure to get loans, and so people were giving loans to people who could not afford them, and it created a real estate crisis. And that crisis not only affected the real estate market, but it pushed us into a recession. So if you'll notice, here we are in 2008, and we actually had a dip in the market. What's interesting about this particular graph is this is our North Texas market. Nationally, the real estate market dipped by 31%. 31%, more than during the Great Depression, but not here. Texans tend to be very conservative. We don't just go super high and super low like the coasts often do. We're not as driven by emotion. We tend to move with the market, but we move at a slower pace. So when California or New York are in a real estate bubble where they're driving the prices up extraordinarily fast without any underlying conditions to support it, will rise just a little. And then when they realize that, oh, there's nothing supporting that market, and they start to sell off in a mass frenzy, we will stall or we'll go down a little. But we don't crash because we're very conservative, generally speaking, here in Texas. I came from Maryland right after a bubble, and so I know what that actually feels like to be in a real estate bubble. We actually made a ton of money in real estate back in the late 1980s, and then again at the 2005 mark, and then the bubble crashed, and then it eventually worked its way out here where we dipped, but we didn't have a crash. Now, as you can see, what real estate does historically is it increases in value. Like anywhere you go around here, the real estate is worth more than it used to be, right? Because real estate always appreciates in value, but it does it like this. So if you just hold on a minute, if you're in a dip, it'll come right back and it'll go up. That's the beauty of real estate. It's like the best investment ever. So over the past 10 years, you can see how we've been going on an upward climb. Now, what I really find interesting, if you look here, this mark right here, this is the 150,000 mark. This is our median price. Here, about 2016, we dipped above that, and we've stayed above that. People who think you can get a good house for $100,000 or $150,000 are struggling, because our average and our mean or median price has well exceeded that. And so I wanted to show you this graph, which I thought was really interesting. This is, again, the last 10 years in our real estate market, and this yellow line is the days that it takes to sell a house on the market. So back in 2008, it took, on median, on average, 60 days to sell a house. You put a house on the market, you'd expect it would take at least 60 days to sell. And you can see over the years how it's been going less and less and less. And so right now, you can see down here, this is about 13 to 14 days is our median price, is our average days on the market, because it's a hot market. Now, does that make it a real estate bubble? No. A real estate bubble is where the prices shoot way high and beyond what they should be. This just means there's more demand than there is inventory. Now this line, where you're seeing from 2008 upward here to 2018, this is the list price. So you can see the list prices of homes is moving again from the $150,000 mark. Here it was just below that, to what now it's up almost to the 250 mark as our median list price. Property values are going up. but they're not going up exponentially. They're not going up at some historic rate that would make it dangerously high. They are increasing in value in response to a great job market in our area and low interest rates. Interest rates historically are 8%. I remember 10 and 12%, but 8% is the historic average. And right now they're hovering at 5%. So you can still get a whole lot more house for the money because you can afford more house. That's putting a demand on the market, which makes those days on market drop because we have lots of buyers looking to buy homes. So if you want to sell a house, now's a great time. And if you want to buy a house, it's also a great time. It's what I call that perfect storm. There's not many markets where it's good for both buyers and sellers at the same time, but because inventory's low and interest rates are low, you can't lose. Now, the last graph I want to show you very quickly is this is the closed price to list price ratio. Okay, so what this is over the last 10 years, when people would price a house, typically what they would do when you think of real estate historically, if a house is worth $100,000, the seller will put it on at 110, the buyer will offer 90, and you'll settle out at 100, right? That's what you think of when you think of real estate. That's not today's market. That's not today's market. And that's where people can get themselves tripped up because they find a great house and they don't want to offer list price or even above because they're thinking, I have to offer lower in order to negotiate up. So here's the chart for the last 10 years. This is the list price to close price ratio, meaning here is your 100% mark. Here's where people list the price of their house. Here's what people get for it. So 10 years ago, people would always list the price higher than what they're actually going to get. Like that's what you thought of when you thought of real estate. You price it high, people offer you lower, and you negotiate. Well, look at these past few years. These past few years, steady, people are getting what they're listing it for, as long as they're listing at market and it's reasonable. Within a few just dips in the market, and even a little bit above price, but not stupid high, not crazy high, not real estate bubble high. So I can assure you the numbers speak for themselves. Numbers is the language of business. We are not in a real estate bubble. We're in a great market. So if you have any interest in buying or selling, please give me a call, and myself or one of my awesome agents would love to help you. Have a great day.